Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, we will apply the classical technical analysis view over the short term for Apple stock. As usual, we will start by the monthly chart. First of all, we notice that the 180 area is turning to be a long-term resistance. So we should change this line to pink to indicate that it is significant over the monthly chart and to indicate the peak that formed around the resistance, the monthly resistance, around the 180 area. It's classical at 182, but as we know, resistances over the long time frames are considered as areas and not clear-cut lines. Concerning the size of the candles during the fall, we can see the last month was a considerable sized black candlestick, with the close is much more nearer to the lower shadow than the middle or the upper shadow of the candlestick, and that indicates a strong selling pressure. And we notice that the stock now is testing a very important support key level over the monthly chart around 134. So keep in mind that the difficult question is Apple going to respect this important support level? This is a very important question because previously this level acted as a resistance around 3 times. 1, 2, and 3. These 3 times were during late or mid 2020 and early 2021. So it's expected that this area may work as a support now, and the stock is really testing it for over the short term. So this is a difficult question that we will try to answer from a lot more detailed time frames. Let's check the long and medium term picture over the weekly chart. Here we go. First of all, we notice that the uptrend is not valid anymore. The long-term uptrend is broken and the break is confirmed. And for that reason, also the channel line is of no use over the short and medium term. So we should indicate this break and update the lines in order to be aware that this uptrend line is broken. And we notice also that there is a kind of reversal pattern. It's not very clear over the weekly chart, but it's apparent that it's something like a double top reversal pattern with a neckline around $154. So keep in mind that this reversal pattern damaged the uptrend over the weekly chart. So the picture is not as bullish as you may think. It's really indeed bearish over the long and the medium term. Why is the technical outlook for Apple is bearish? Because first of all, it reflected to the downside from the monthly resistance, as we have just mentioned, over the monthly chart, and the resistance was 182. Secondly, it broke the uptrend line, and this break was confirmed and valid. And it completed, this break came also by completing the reversal pattern over the weekly, and I think we will see much more details over the daily chart. So after breaking these supports, first of all the neckline at 154 and the joint break with the uptrend line at around 150 approximately, in addition to the reflection from the resistance, all of these caused a bearish environment and a start of a new trend. This new trend can be sideways, and I think it can be downtrend. So the result of the ending of this trend can be sideways, again ranging between the two significant long-term supports and resistances of the monthly chart. What I mean is it can oscillate between these two this way. The resistance, as we have mentioned, around 182, and the support around 134. This is one scenario, but according to the severe weakness in the structure of the markets in general, I think it may initiate a new downtrend over the medium and the long term. So the definition between is it going to be a trading range or is it going to form a new downtrend over the medium and long term, this is going to be decided by, is it going to reflect, is it going to bounce upwards from the support at 134? If it did, then we can be having a trading range in the formation. But if it broke below 134 and the break was decisive and confirmed, then a downtrend is much more likely. So let us check the daily chart to see the short-term details. First of all, now we can now determine easily that this was a triple top reversal pattern, not just a double one, and the neckline was running exactly through 154 as we have mentioned. In addition, it's very clear that over the short term there is an impulsive wave to the downside. Okay. A correction, if Apple managed to start a correction against this downward wave, I think it may target the resistances we have just talked about. First of all, the broken trend line. Secondly, the neckline of the completed reversal pattern, aside to some short-term horizontal resistances. So this zone will be considered a very difficult zone. It may be ranging from $152 up to $156 or $158. So this zone may be of around $6 thickness, where all resistances from different time frames are combined together around these areas. So keep in mind that the correction is fragile, especially if it came on decreasing volume. If this was the case, I do expect the stock to reflect again downwards and start a new impulsive wave to the downside, initiating a bigger time frame weekly downtrend. I think this will be the case. Of course, the exceptional scenario with a low percentage of probability can be its break above all these resistances and continuing upwards again towards the 182 monthly resistance, which is not likely. And according to the market structure in general, as well as the bearish environment over most of the indexes, I think Apple will face a strong resistance and heavy selling pressure around the 154 area, plus or minus $2, and this red zone area will hit the stock hard and it will resume its downtrend and start initiating an impulsive wave to the downside with targets much lower than 134. So that's it for Apple over the short term. And keep in mind that when the stock reacts and corrects to the mentioned red zone, keep in mind that we will start watching it closely in order to do some virtual trading by going short in expectation that the stock will resume its downtrend. That's number one. Number two, it's a chance, a good chance, this correction will be a good chance to minimize losses for those who went long against or during the last fall. Now a good question pops up. What if the stock did not correct to the upside? What if the correction did not happen? Then we will keep an eye on a direct break below the 134 level, and especially if it managed to break this small short-term support around 129, 129.50. This will indicate the sellers gaining momentum to the downside, and we will do our virtual trading by going short after a valid break and confirm it close below 129. That's another case. But I think there is a kind of correction on the way. In both scenarios, we are ready for the virtual trading by going short, either by reflection from the resistances or break of the monthly support, and by confirming it by breaking the short-term support around 129. Of course, the targets will differ, that's for sure, and the stop loss points will be different, that's for sure, and the risk will be different. But the structure of going short in this bearish environment in Apple is the wise decision. Until the stock regains its bullish environment, I think this may take months, maybe more, maybe years. It may take 1 or 2 years to change this bearish environment. It will not be within a day or two or a month or two. It will take long time to change the mindset of the investors in Apple, especially after the completing of this reversal pattern that took long time. It took from December 2021 and was resolved on mid-May 2022, which is 6 months long, and 6 months long in a reversal pattern. I think we do have at least a year and a half of bearish environment over the long and medium term in Apple. That's it for now. Keep in touch. Please like, share, and subscribe, and see you soon.